Good morning, traders. Richard here doing a quick review of the NASDAQ 100 E-minis futures contract. We're now stuck in bearish territory for about 9 trading days now. Price action below the cloud is bearish. You can see how the bottom end of the cloud became resistance zone, and those are kind of a line in the sand now. For the futures to be bullish, we need to be back above the top end of the Ichimoku cloud. So still stuck in bearish territory. Key levels for support to watch out for is this bottom end of the cloud chart shadow. You can see the markets trying to rebound from that zone. Earlier in the week did rebound from that zone, but it'll be interesting to see if we get a follow-up. The next key level is this one at the bottom in the cloud there. That zone is what, 24,433. The next one is this one. Watch out, you can see we had a rebound from this zone, 24,248. So it'll be interesting to see if we're going to get there. If we look at this move down, rebound down, it's quite possible that we could test the 233 exponential moving average for support. So watching closely to see a couple of down days and then a potential rebound from this 24,248 zone. That's the November low here, and also the January start of the January month. So we'll be interested to see if we're going to get there. So and there's a possibility for swing trade rebound from these levels back up to the bottom end of the cloud. That's the upside resistance targets for any kind of potential swing trade, and support that comes back into the market at these key levels. Turning to the 4-hour Ichimoku cloud, we can see we've had some really fantastic swing trade signals here generated by the artificial intelligence. We've had a volatility breakout signal recently. That's where the trading stop is. I suspect we'll get another volatility breakout signal in and around this 24,500 zone. But now you can see how the cloud has become the resistance zone. We've been in bearish territory since the last slice through the bottom in the cloud. Yeah, that was also a short sell signal in the market if you were trading the short side here. And now we've stuck below the cloud, so the 4-hour Ichimoku cloud is bearish. For it to be bullish, we need to be back above this top end cloud chart support zone. So keep an eye out for kind of a swing trade rebound rally back up to the bottom end of the Ichimoku cloud, and then it's going to struggle to break past that zone. And if we break past that zone, we will be in a new bull market on the 4-hour Ichimoku cloud. But still stuck below the cloud for now with downside risk targets. Let's go and take a look where those risk targets might be. Projecting the daily support downside risk targets, we've got the first one here, 24,553, 24,427, 24,244, and 23,978. That's 24,000. So we could see a downward continuation pattern from this resistance of the cloud. Rally to the downside, did rebound, found resistance at the bottom of the cloud, and then the next leg down. So we could still easily see this 24,244, this low being retested on the 4-hour Ichimoku cloud. So looking out for potential swing trades in and around the support targets, with the upside target, the bottom end and the top end of the upside of the top end of the cloud, Ichimoku cloud, on the 4-hour Ichimoku cloud. But keep really a close eye out for support rebounds on these daily Ichimoku targets. Until next time, happy cloud chart and AI trading. Bye for now.